Now, it is a fast-growing industry, and it was fast-growing industry for quite a while already. And I presume everyone is somehow, like, I mean, involved with these products from this industry. I presume it's impossible now to live a life not to interact with these particular companies and from that industry on a daily basis. It doesn't really matter what you use: mobile phone, your computers, cars, like some home appliances now, all these robots, they are hovering in your places, smartphones, smartwatches, a lot of products right now. At the moment, if we look, as I already mentioned, a lot of companies in this particular industry, they are overvalued. Okay, they are pricey compared to companies in other industries. Because if we look at some, for some biotech stocks, so we could find them in a range of, I would say 15 to 25, right, price earnings ratio, whereas companies in this particular industry, some of them the 100p ratio. Okay, crazy valuation. Okay, quite a lot. Now, also, it's important to understand that it is very high competition with this industry, and there are very different sizes of companies. There are small companies, would be only 5-6 people. They join together and they're working on one program, niche product. They develop only one application or one kind of software which fixing one bug. Okay, and they're working. And after that, what they do usually, they sell their company to the bigger company. So that's why a lot of companies, big companies, they're growing by acquiring smaller companies, smaller competitions, or some kind of partners, or creating mergers. Okay, that's how a lot of companies growing. Why we need to know about this? Because when you look at balance sheet, okay, when you look at valuation, a lot of people expect that when I buy something, I have to expect certain assets within this company. Okay, so if you go and buy the shop, I would say retail shop, you understand that there are computers there, tables, some kind of shelves, some stocks, some cash, and you understand when you're paying, for example, $10 million for that, maybe you have about $5,000 or $5 million of stocks there, right? So some kind of assets, and then 5 million you're overpaying for the goodwill, so for something which is kind of creating this business general, right? In this particular case, what happens that software is, if it is developed by company itself, you cannot put it on a balance sheet. It's like zero balance sheet, unless $0 on a balance sheet, unless you purchased it. When you purchase software, you put it as an intangible asset because you cannot touch it. And the question is for how much you can sell it. Now, if this software nobody wants, so it's practically zero value, right, in this particular case. But from other point, if you develop certain software and you didn't put it on your balance sheet, but then if something happens with this company, the company actually can sell the software for quite a lot of money. So that's why when you're analyzing computer software industry, it's very difficult to evaluate the company based on the book value, because in some cases, book value, like real book value, is much less than we see it on the balance sheet, but in some cases it's much higher, really, if we take into consideration the software which we developed and we can sell in difficult time. Okay, so that's why a lot of people who kind of invest in this industry, they have to understand what kind of companies they are dealing with. I'll tell you straight away, my first qualification is medicine. I'm a doctor, right? And the second qualification is business, and then finance and accountancy. So I'm not expert in software whatsoever, right? And thank you very much, Max Vlasov, because he explained me about this particular industry. And we have a lot of like guys in our team, in our investment club, who are from that industry. And probably I started investing in the software industry around 5 years ago. Before that, I wouldn't touch any IT company at all. So because for me, it was like very gray area, I wouldn't be able to understand the business, but now I can rely on expertise of our colleagues, investors. Okay, so we just thank you very much, guys. Okay, I can see a few of you here. Now, it's actually helped me to make a lot of money. Now, So the next one is very important, that during last year, a lot of like businesses, not software businesses, but I mean general businesses, retailers, I mean travel industry, all other aspects, businesses, what they have done, they reduce their spendings because they don't know what is happening, and they try to reduce their costs. So they stopped buying updates and improving their software, because this is kind of the easiest way to do, right, to reduce the cost. But it's only in some areas, because if you're trying to move online, so you actually have to install new software, you have to train your staff, you have to create software which help you to manage your employees, right, if they work from home, right? So a lot of businesses, if they want to stay competitive, they actually had to spend a lot of money for cloud computing and for software which assist them to move their business online from offline. Okay, this is very important. So if the company, software company, software development company produces only software which necessary for some kind of desktop applications, they might be in trouble, because people are maybe affected by last year pandemic, because people don't spend money for them because it's not essential. From other perspective, other businesses which producing software, they actually benefited out of it. And we already a few months ago, we looked at a company called Cisco, which actually benefited a lot from this pandemic time. Yes, some of their business was affected, but also other part of their businesses, which is kind of showing online interaction, it was improving quite a lot. So in today's company, which we're going to discuss, it's actually benefited quite a lot from this particular move. Now, as I already mentioned, it isn't easy to establish quality of the product itself without deep analysis and understanding of it. Okay. Also, it is easier to keep sales and profit steady for big companies. And the main reason is like that. Can you imagine if it is a small software company and they're producing niche products, so which solves one particular problem, and if another competitor come and offer similar type of product, so they're already competing with that, and because they have only one product, their sales level can drop like 50% or even go into negative area, so they can lose money instead of make money. Now, a lot of bigger companies like Microsoft, for example, what they do, they offer some products for very, very cheap price or completely for free, but after that, they keep selling the second one, satellite products. So, and they put more and more and more and more, and they do it until the moment you actually cannot switch off from that particular service. And you understand that majority of companies, big companies, they're trying to do this thing. So they're introducing you with one product, and after that, they're introducing you with the whole spectrum of their product and trying to make you to buy all of it. And it's called high loyalty of the clients because of the high switching cost. Can you imagine if you already integrated into your business activities all these softwares, and then you decided that I don't like one particular software, but you cannot change it for the simple reason because it's not going to work with other applications, okay? And you would have to like change completely everything, okay? Reinvest a lot of money. It's one thing. But secondly, what can also happen, you would have to retrain your staff and your clients how to use the software. You know yourself how frustrating it can be when a company like do some upgrade, right, and updates, and then you install it and they change few things there, but you're already trying to find familiar buttons, and it can be quite frustrating and on small changes. But can you imagine when the whole application changed a lot? And actually what I don't know, Max, if you're here, you can tell about this software, how important VMware for you let me know if you want to say it yourself, or you let me to tell it. Just put it in chat and I could give you a microphone and you might tell about this company. But definitely loyalty is one of the big things which kind of imposed on the companies, right? And again, as I said already, very often the speed of growth depends on how quickly they acquire new technologies And sometimes it's a simpler way just to acquire other companies instead of developing it yourself. Because if you hire development staff, you never know if they're going to have this breakthrough or not. But if you find other guys who already developed it and already have breakthrough, right? So it's actually, I mean, fantastic stuff. Right? Okay, I'll give the few words to Max, and I'm going to find you. Ask to unmute. Okay, I asked you to unmute. You have to agree, Max, and then you can tell about how difficult to switch off from one company to another. It is very important, guys, when you invest in companies like that. You have to understand how sticky their business to businesses of their clients. Okay, Max, are you online?
Hi guys, can you hear me?
Yeah, guys, put the tick something in the chat that you can hear Max. Okay, yes.
Yep, just a quick background on VMware as a company and its customer base. So basically the largest customer base is within enterprise businesses, meaning like in Australia it would be top 4 big banks and top insurance companies and large enterprises. And when you talk about these companies, in terms of their IT infrastructure, they have very few choices. They can go either to public cloud like Amazon or Microsoft Azure, or they can host their infrastructure on premises, meaning in their own data center. In terms of big banks or insurance companies, they're in heavily regulated industries and they have a lot of compliance and regulations, so they cannot always go into public clouds. It's very tricky for them. They are investigating these opportunities, but they move only a small portion of their businesses into the cloud. So they pretty much have to host their infrastructure internally in their large data centers. And this is where they traditionally been using VMware as their platform for virtualization, meaning over the last decades, literally like over 10 years, all these companies, they've been developing their software based on VMware virtualization technology. So it's pretty much ingrained in the core of their IT infrastructure. And VMware in particular, it's licensed in a way where you as a business, as a bank, for example, have to pay annually a large amounts of money. Like, to give you an example, a big bank in Australia would be paying tens of millions of dollars just on ongoing fees for support. And if you want to do any upgrades or if you want to do any infrastructure refresh project, it's going to cost you even more. To be able to switch from VMware to a competitor for a large company, it would cost millions, and I mean not just a few millions, it may be even in hundreds of millions of dollars. So personally, I was involved in a project was $200 million just to change the platform. So this is the cost of switching from VMware, and the benefit you get is a small discount in your operational cost. So it will cost cheaper to host it somewhere like an Amazon on an ongoing basis, but your cost of switching to Amazon would be hundreds of millions of dollars. And this is why VMware is there to stay in large companies like that.
And probably you never know, because even Amazon can increase the price later on, 3 years later, and all the switching costs would be obsolete in this case.
And they will negotiate and they will give you a good deal if you decide to move.
Yeah,
they will fight for the customer. They will come up with discounts and other incentives.
Okay, great. Okay, thank you very much, Max, a lot. So I presume your insight was very, very valuable, especially that you're working in this industry in a bank and you know it's from your personal experience. Fantastic. Thank you very much. Can you turn off your microphone, if you know how to do that? So I presume, and then if you want a voice, you can turn it on again. All right, guys, let's have a look at what value line's saying and what kind of companies in here. So the way it happens, like generally, I just want to show you that personally, myself and a lot of investors from our group, our investment club, what we do, we use value line. We use different platforms, but value line is one of the analytical platforms where you can get access to about 6,000 companies, US traded companies, and we usually invest in the United stock market, and that's what they give the report for each industry. Now, they have 100 industries, and this particular industry right now rank 8. The lower the level, the higher potential this industry have for the future 12 months. Okay, so it is pretty low. And if you read about this, probably Value Line will tell here what I already mentioned, so that this specific industry it's actually had a good year last year, and they have also good projections for 2021. Right, and as you can see, the biggest company in this field, you probably know, Microsoft, right? And VMware, it's much smaller compared to Microsoft, right? And like some companies, there are biggest companies on the market in this particular industry. Okay, how I proceeded from here, when I decided that I'm going to look for something from this industry, I just checked it, and that's what I did. Value Line has a screener. So what I can do, I just asked, okay, I want this particular industry, okay, and 166 companies was in the list. After that, I added 2 parameters only. One parameter was that I want to earnings per share growth higher than 10%. So I wanted the company growing in earnings, net profit, year after year for the last 5 years, more than 10% annually. Okay, and then I also put trailing P ratio. Again, this valuation, how much people are paying for $1 of profit of these particular companies. Actually, I started from 15. It's only one company appeared here. So, and I didn't really like particularly that company, probably from first point that I didn't understand the business structure. Okay, but secondly, what I've done, I increased it to 25. Now, even I put 25, and it seems like quite a lot for some other industries, but for this specific industry, it's not that high. And that's why only how many companies left? Only 3 companies. Okay, out of 166 companies, only 3 companies, they show the growth rate more than 10% annually, and they PE less than 25. The rest of them, they have 2 things. Maybe they're not growing, okay, they're somewhere on a stable level, or they are too expensive, or combination of both. Okay. After that, what I've done, I just quickly put it in another application platform, which we also quite often use. It's FinViz called. And just in order to see how they look their price graphically. And as people who understand technical analysis, you probably will see that CTXS, the company, it's kind of broke through the support, which was around $135 level here, broke, return, and now it's bouncing under it. Actually, it can have a breakthrough and go up, but also it can go down all the way. Okay. Now, when I looked at this specific company, actually for the last few years, their earnings are not growing, very tiny, growing for the last 3 years. So that's why probably the valuation is the cheapest right now. SSNC company, we can see it's run way up, so it's quite high. And based on technical analysis, personally, I believe that it might pull back quite a lot. And when we look at VMW, we're going to look at technical analysis more precisely. But if you see that it's dropped down quite a lot during the like lockdown, but after that it pulled back up, and now it's kind of sideways. And the best stock to trade is a sideways stock, right? Because you can use all different type of strategy using it, and you can sell calls, covered calls, but you can sell puts, and you can just buy and sell stocks and trade it. So I personally love when the stock moves sideways because it's kind of more predictable, and that's what happens with VMW right now. Okay, and basically I started analyzing this company in more details, and that's what we are going to say. Just a second, some chat messages here. This is FinViz, correct? FinViz, yes, okay.